Deposit $10,000 in cash and your bank reports you to the federal government. Automatically. No warning. No choice. Hello, friends. If you're over 60 and you keep cash at home, today's 6 rules protect your money. And stay with me until number 6, because it's the one thing almost everyone gets completely backwards. Number 1. The $10,000 rule is real, but it is not new, and it is not a 2026 law. It comes from the Bank Secrecy Act, passed in 1970. It has been on the books for over 50 years. Here's the mechanic. Any cash transaction over $10,000, a deposit, a withdrawal, even exchanging small bills for large ones, requires your bank to file a currency transaction report with FinCEN, the Treasury's Financial Crimes Enforcement Network. The teller will ask for your Social Security number, a photo ID, and sometimes where the money came from. Since July of 2012, these reports are filed electronically, and the bank keeps a copy for 5 years. Banks file millions of them every single year. It is data collection against money laundering, not an accusation against you. Filing a center does not trigger an audit, does not freeze your account, and does not generate a letter from the IRS. Most people who have one filed on them never hear about it again. Now, the mistake that actually causes damage. A retiree walks in with $12,000 from a car sale. The teller mentions a report will be filed and he panics, takes $3,000 back to stay under the limit. That reversal is exactly the behavior tellers are trained to write up, because backing out of a transaction to dodge the report looks like concealment. One routine form just became a red flag with his name on it. So here's the rule for point 1. Deposit the full amount in one transaction, show your ID, and answer questions in plain sentences. The report costs you nothing. Trying to prevent the report is the only thing that can cost you, and by the end of this video, you'll see just how much. Number 2. The $10,000 is not one magic number on one deposit. It aggregates. 2 cash deposits on the same business day at the same bank get added together. $6,000 at the drive-thru in the morning, $4,500 inside that afternoon. That's $10,500, and a report gets filed. Different branches. The ATM plus the teller window. Same rule, same total. Withdrawals aggregate the same way, which surprises people planning to pull out cash for a roof repair or a used truck in 2 trips. And there's a second form most seniors have never heard of. Form 8300. Any business that receives more than $10,000 in cash must report it to the IRS, and related payments get combined for a full 12 months. Say you buy a car from a dealer and pay $4,000 down in cash, then $7,000 in cash 3 weeks later. The dealer is required to report the combined $11,000 with your name and Social Security number on the form. Same when you pay a contractor, a funeral home, or a hospital in cash. Cross $10,000 on one deal, even in pieces, and a federal form gets filed either way. The typical mistake here, assuming each piece under $10,000 is invisible and being shocked, or worse, angry at the business when the paperwork appears. The business has no choice. Refusing to file, for them, is a crime. So before any large cash purchase, decide up front. Either pay by check or wire, which involves no cash reporting at all, or pay cash knowing the form is coming and that it changes nothing if your money is clean. And hold that phrase "stay under $10,000" in your mind, because number 6 is where that exact idea sends honest people into a federal courtroom. Number 3. What actually flags your account is behavior, not the amount. Besides the center, banks file a second document you are never told about, a suspicious activity report. There's no fixed dollar line. It's triggered by patterns. Deposits that suddenly don't match your history. An account that's seen $1,200 a month for years suddenly moving $9,000 a week. Repeated deposits sitting just under $10,000, $9,400, then $9,700, then $9,200. And the classic self-inflicted wound, asking the teller, "How much can I deposit without it being reported?" That one question can generate a suspicious activity report on its own, because you've just announced intent to avoid federal reporting. Bank employees are also specifically trained on elder financial exploitation, and here, that training works for you. A 70-year-old customer asking to withdraw $9,500 in cash for a grandson's bail or to buy gift cards for the IRS Tellers are taught to slow that down, ask questions, sometimes pause the transaction entirely, because those are the signatures of the grandparent scam and the imposter scam. If that ever happens to you, the hold isn't the bank stealing your money. It's the last checkpoint before a scammer gets it. The mistake in this section, treating the bank's questions as an insult and getting evasive. Vague answers, plus unusual activity, is exactly the combination that turns routine into suspicious. The move that keeps you boring, and boring is what you want, is simple. Consistent banking, plain answers, and if a big transaction is coming, mention it to your banker a few days ahead so it lands as expected activity instead of an anomaly. Number 4, the cash at home problem, because this is where seniors genuinely hold real money, envelope savings built over 20 years, 60 years of birthday bills. An inheritance discovered in a parent's freezer or gun safe. Families settling estates report finding 20, 30, even 50,000 in cash. All of it is legal to deposit, in full, tomorrow. Here's the right way to do it. First, one trip. Bring the entire amount in a single visit and let the report be filed. Second, bring paper, the estate inventory or a letter from the executor, the bill of sale for whatever you sold, old withdrawal slips if the cash originally came out of a bank. Third, don't do it cold at the window. Call your branch ahead. Tell them you're bringing in a large cash deposit, and they'll often set up a private handoff and count it by machine. Fourth, keep your own one-page record, date, amount, where it came from, and understand what the risk actually is. Cash itself is not income, and depositing it creates no tax by itself. But if the IRS ever does ask, the difference between a nightmare and a non-event is whether you can answer, "Where did this come from?" with a document instead of a shrug. Now the mistake, and it's the one that ruins people. Depositing that legal $50,000 as $9,000 a week for 6 weeks to be safe. That pattern converts perfectly legal money into evidence of a federal crime, the one waiting at number 6. One deposit with one report is safety. 6 quiet deposits is a case file. If you take a single sentence from this video to a family member, make it that one. Number 5. The new 2026 bank law panic is manufactured, and knowing where it came from protects you. In 2021, the Treasury proposed making banks report total yearly inflows and outflows on accounts, first at $600, then raised to $10,000 after public backlash. That proposal was never passed. It is not law in 2026. But those headlines never died. Every year, videos and posts recycle new IRS $10,000 rules starting now, because fear of the IRS is one of the most clickable emotions aimed at seniors. You now know the truth. The only $10,000 cash rule is the 1971, and nothing new took effect this year. Here's why this matters beyond annoyance. Scammers ride these fake headlines. The script goes like this. A caller says he's from IRS enforcement or bank security, tells you your account was flagged under the new $10,000 rule, and instructs you to move your savings into a safe account, read out a verification code, or pay a compliance fee in gift cards. Every piece of that is fake. The IRS does not call you about deposit flags. First contact comes by mail. Your bank will never ask you to move money to another account to protect it. And no federal agency accepts gift cards as payment. Seniors lose billions of dollars a year to imposter scams, and the flagged account story is a workhorse of that industry. The rule for point 5. Any claim about a new bank reporting law gets checked in exactly 2 places, irs.gov and fincen.gov. If it isn't on a .gov page, it isn't real, no matter how many times it's been shared. And number 6. The one people get completely backwards. After hearing about reports and flags, the instinct is, keep every deposit under $10,000 and stay off the radar. That instinct is the crime. It's called structuring. Title 31, U.S. Code, Section 5324, and it makes deliberately breaking up cash transactions to stop the bank from filing its report a federal felony. Read that carefully. The crime is not where the money came from. Your money can be 100% legal, pension savings, a home sale, an inheritance, and splitting it into $9,000 deposits to avoid the paperwork is still, on its own, punishable by up to 5 years in federal prison. Cross $100,000 structured within 12 months, and the penalties double, up to 10 years. And it isn't only prison exposure. The government can seize the money itself through civil forfeiture, up to the entire structured amount. This is not theoretical. In 2014, the IRS seized $35,651 from a small business owner over nothing but a pattern of under 10,000 deposits. No drugs, no fraud, no tax charge alleged. A later federal review found that most IRS structuring seizures involved money from legal sources, ordinary people who thought they were being careful. Bank software is built to detect exactly this pattern. Those repeated 9,400 deposits from number 3 feed straight into it. So here's the inversion to carry out the door. The report is harmless. It's a form you never see. The avoidance is what takes people's savings. This rule has never hurt an honest depositor who walked in the front door with the full amount. It only hurts the ones who tried to walk around it. So this week, one step. If you're holding cash you've been trickling into the bank in small pieces, stop today. Write down where it came from. Gather any paper that proves it. Call your branch and deposit the rest in one transaction. Let the report be filed. That form is your protection, not your problem. If this video protected you or someone you love, subscribe and share it with one person over 60 who keeps cash at home.